It's Friday, 12th of December, 2025. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday.
So we have a lot of cross currents to navigate today.
A lot of tension, it seems.
Definitely. On one hand, you've got this celebration in global markets from a major rate cut.
But on the other,
While on the other, there's this persistent capital flight from India, some serious anxiety on Wall Street about AI spending and, these critical trade talks that have India sort of juggling the US and the EU.
all while new tariffs are popping up from Mexico. Okay, let's unpack this, starting right at the top with the global money magnet.
The US Federal Reserve.
The driving force for the last 24 hours. They cut their key interest rates by 25 basis points. For listeners who aren't tracking central banking moves daily, what's the immediate message here?
The message is, well, it's pretty clear. Less hawkish, more accommodative.
So easing up.
Exactly. A rate cut signals the Fed is either confident on inflation or maybe a little concerned about growth, so it's easing the cost of money. For global markets, that's basically rocket fuel.
Lower borrowing costs, better valuations.
Right. It encourages risk-taking.
And that stimulus certainly made its way to Indian shores. Our indices reacted positively,
They did. They finally snapped that three-day losing streak.
rising by about, what, 0.5% on the news?
Roughly, yes. It was that much-needed impetus they were waiting for to bounce back.
But that's only half the story, isn't it? And maybe the more fragile half.
I'd say so. Because if you look a bit deeper, that rally, it kind of lacked conviction, especially from the offshore players.
You're talking about the foreign institutional investors, the FIIs.
They continued their selling streak. That makes it the 11th consecutive session of net outflows.
11 sessions. That feels like a structural trend, not just a one-off fluctuation.
It is?
So is this just typical year-end profit booking, or is it something deeper? A sign of risk aversion about India's valuations, maybe?
It's probably a mix of both, but the sustained nature of it suggests something more than just simple profit-taking.
Right.
When you see global money pulling out so consistently, even when the Fed is sending a positive signal, it tells you they see better risk-adjusted return somewhere else.
Or they're worried about liquidity. It's a real headwind for the market.
Major headwind.
Yeah.
And you can see that pressure point showing up very clearly in the currency market, correct?
Absolutely. That sustained FII selling directly pumps up demand for the U.S. dollar as investors take their money home,
And that pushed the Indian rupee to an all-time low in intraday trade.
slumping a pretty significant percentage. It just shows how, even with positive global macro news, if the capital flow story is negative, domestic assets like the currency really take the hit.
They bear the brunt of it.
Now let's flip over to the other side of the global market. Wall Street was completely split.
Totally bifurcated. You had the broader S&P 500 hitting a record high, Asian stocks opening higher, all that rate cut optimism.
But the tech-heavy NASDAQ slid to a one-week low. What's driving that massive divergence inside the U.S. market?
It's a perfect lesson in the current cost of the AI arms race.
Okay.
All that optimism from the Fed was completely overshadowed by headwinds at one major company, Oracle.
And their stock plunged.
Plunged a staggering 14.4% after their quarterly forecast just missed expectations.
A 14.4% drop for a blue-chip tech firm is a huge signal flare. What spooked the market so badly? Was it just slow sales?
No, it was the cost tied to their future growth. Oracle is spending, really spending aggressively to build out its cloud and AI infrastructure.
To compete with Amazon and Microsoft.
Exactly. And the market's reaction suggests this profound anxiety that the massive cash burn required for this strategy is outpacing the immediate revenue.
So investors are basically saying, we like the AI dream, but we hate the price tag right now.
That's it in a nutshell. It's a major cautionary tale about the profitability and liquidity you need to keep up in this tech race.
Okay, so global capital is nervous about big tech's costs. Let's shift focus now to India's domestic economy, where a different cost, the cost of living, is painting a surprisingly resilient picture.
It's a really critical contrast. The finance ministry just released data suggesting rural economic fundamentals have, and I'm quoting, clearly strengthened over the past year.
And this is fundamental strength, not just financial market noise.
Precisely. New survey data shows a broad-based pickup in consumption, rising incomes, and crucially, improving financial behavior in non-urban India.
So we're not just leaning on the urban consumer anymore. This must give a lot of confidence to future forecasts, right? What's the consumption outlook?
Economists are expecting this strong momentum to continue right into the coming year. They're looking at a powerful mix of tailwinds.
Such as?
Well, first, low inflation, which means your money goes further.
Correct.
Second, the lasting positive effects from earlier GST cuts. And third, easing policy rates, which means cheaper loans for consumers.
It creates a kind of positive feedback loop.
It does. Stronger rural incomes support demand, which drives investment.
All right, let's move to the nuts and bolts of corporate finance and government restructuring. The privatization story of IDBI Bank seems to be heating up.
It is. And we have a clear frontrunner now, Toronto-based Fairfax Financial.
They've emerged as the most likely candidate to acquire that controlling stake from the Center and LIC.
Yes, and this is a crucial step for the government's disinvestment target, especially with that financial bid deadline at the end of December. It's the biggest privatization prize on the block right now.
Speaking of structural reform, Niti Aayog is pushing for something that could really alter how corporate India raises money.
This is a huge long-term vision they're proposing for the corporate bond market.
A massive transformative push.
Absolutely. They're advocating for sweeping regulatory and tax interventions to make corporate bonds attractive to, regular retail investors.
And the goal is to grow this market to be several times its current size by 2030.
Reducing that over-reliance on bank lending.
So break down the mechanism for us. What are the tax interventions that could get the average Indian investor interested in corporate bonds?
Two main proposals really stand out. First, extend Section 80C benefits to cover corporate bond investments.
That's the main tax-saving bucket for most people.
Right. Right now, it's mostly insurance and mutual funds. If you add bonds to that, you instantly create massive, stable demand. Second, they want to equalize the long-term capital gains treatment.
Because right now, gains from bonds are taxed differently and often less favorably than from equities.
Correct. Equalizing that removes a major barrier and encourages long-term holding.
That makes a ton of sense. You're using the tax code to push liquidity into an underdeveloped market. It's a genuinely transformative idea.
Now, turning to operational updates, we have India's largest airline, Indigo, hitting some serious turbulence.
And right in the middle of the profitable holiday season, they've lowered their capacity and revenue guidance for this quarter.
They have.
Why the capacity hit now? During the peak travel quarter, did they suddenly lose market share?
It was actually a regulatory blow. The government mandated a 10% reduction in their total flights in the winter schedule.
Usually tied to congestion and fog season safety at major airports.
Exactly. And that severely hampers their ability to meet that peak demand. When you're forced to ground planes during your most profitable quarter, it hits the bottom line hard.
On a much brighter note, though, for India's infrastructure and digital self-reliance, a big success story for Tejas Networks and the FaradNet project.
A major win for domestic manufacturing. Tejas Networks secured contracts for IP routing equipment in 7 of the 12 FaradNet Phase 3 packages announced so far.
Making it the largest supplier in the government's huge rural broadband initiative.
This isn't just about selling boxes. It's providing the critical backbone for connecting millions of rural homes and reducing our reliance on foreign vendors.
A great signal for domestic industry. And we're seeing a similar positive signal from retail investors, too.
We are. Equity mutual funds saw a strong recovery in November. Net inflows increased by over 21% month on month.
This tells us that despite that sustained FII selling we talked about, the domestic retail investor is still a really robust counterbalance.
Without a doubt, the recovery in inflows is tied to strong market performance. It suggests the public still sees equities as the place for growth and is happy to buy on the dips.
That provides some real structural stability against short-term global whims.
It does.
Okay, moving now to geopolitics and trade. The chessboard is incredibly busy this week. India is positioning itself between major global blocs.
It is. Prime Minister Modi spoke with U.S. President Trump amid those ongoing bilateral trade agreement, or BTA, negotiations.
And that negotiation has been dragging on. The messaging from India seems to be getting firmer.
Much firmer. Commerce Minister Piyush Goyal stated very clearly that the U.S. should sign the deal if Washington is happy with New Delhi's offer.
So putting the ball squarely in their court.
Right. It signals that India feels it's already offered its maximum concessions.
And while that BTA tension is simmering, Europe is aggressively courting India.
They are. Italy's deputy prime minister visited, and reports suggest an India-EU free trade agreement declaration could come soon.
That's a massive economic counterweight to a deal with the U.S.
It's a clear demonstration of India's strategic diversification, not putting all its eggs in one basket. Securing a modern FTA with the EU is crucial for exports.
But the trade news isn't all positive. A significant headwind is popping up from Mexico.
Exactly. Mexico announced surprise tariffs of up to 50% on imports from non-preferential trade partners, which includes India.
And that move mirrors the U.S. tariff stance.
It does. It's meant to protect their domestic industry from what they see as cheap imports.
So what does a 50% tariff mean in real terms for Indian exporters?
It's a major choke point. It could seriously impact India's annual shipments to Mexico, making our goods far less competitive overnight. It's a reminder that global protectionism is still a very complex, shifting landscape.
Moving to defense and diplomacy, India expressed grave concern over Pakistan's recent airstrikes on Afghanistan.
Calling it a blatant violation of sovereignty. And this is more than just a statement. India also specifically criticized Pakistan's tactic of using what it called trade and transit terrorism.
What does that mean exactly?
It means closing key access routes for landlocked Afghanistan, basically leveraging its geography to choke essential supply lines.
Using geography as a weapon, a potent strategy against a landlocked neighbor. Okay, and a final quick note on energy geopolitics. The sanctions against Russia's oil exports, they seem to be having a real effect.
The numbers are stark, according to the International Energy Agency. Russia's oil export revenues dropped in November to their lowest monthly level since the invasion of Ukraine began.
So the price gap is working.
It shows that while Russia has found new markets, the coordinated international effort is effectively capping their main revenue stream and, well, constricting their war funding.
To wrap up our deep dive, we always turn to the scientific innovation that will define our future. We've talked a lot today about the anxieties around the AI race. Let's look at the payoff. The next gigantic leap seems to be focused on spatial intelligence.
Indeed. We're moving beyond just text and 2D images. Think of current AI as being great at reading a map, but not truly understanding the 3D world that map represents.
Doesn't get the physics.
Exactly. Startup World Labs just released something called Marble, its frontier multimodal 3D world model, to tackle this exact gap.
So how is a 3D world model fundamentally different? What does spatial intelligence actually let an AI do?
In simple terms, it lets the AI system interact with and reason about the physical three-dimensional world. With real physics, it understands depth, volume, occlusion, not just pixels on a screen.
So it could understand that a box won't fit on a shelf or how gravity works.
Precisely. This is critical because the real world is 3D. Marble lets an AI model how a piece of machinery moves or simulate a factory floor.
So we're moving from a flat, interpretive AI to an actionable, physically grounded AI. Where does this get adopted first?
Enterprise is the key here. Think industrial robotics, automated warehouses, autonomous vehicles. Instead of complex code, an AI with spatial intelligence can dynamically route a forklift or plan a construction sequence with incredible accuracy.
It bridges that gap between the digital model and the messy physical world.
That's the perfect way to put it. It's a true transformation for any complex physical operation.
So that's the difference between looking at a blueprint and actually being able to walk through the building yourself. A perfect provocative thought for you to chew on as we wrap up this week. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.